Imagine opening your bank account and seeing that your next Social Security deposit is suddenly larger, perhaps by $80 or even more. There was no new cost of living increase. Congress did not approve a surprise senior bonus. Social Security did not add extra retirement credits. The change happened because one document revealed that too much Medicare money was being deducted each month. That document is your Social Security Medicare Premium Notice, the letter showing whether an income-related monthly adjustment amount, or IRMAA, has been added to your Medicare Part B or Part D costs. Many seniors glance at the total and put the letter away. That can be expensive. If Social Security is using income from a year when you were still working, receiving two salaries, or earning money that no longer exists, the premium may not reflect your financial life today. A qualifying request can sometimes lower the Medicare surcharge. When Medicare premiums are deducted from Social Security, a lower deduction can make the amount deposited into your bank account rise. But understand the truth. This does not increase your gross Social Security benefit or work for every senior. It can increase the net payment only when an income-related Medicare surcharge is being deducted and Social Security approves a lower amount. Stay with me, because the line most people overlook is not the Social Security benefit amount. It is the small section explaining which tax year was used to calculate the Medicare surcharge. For 2026, Social Security generally uses modified adjusted gross income from your 2024 federal tax return. If 2024 information is unavailable, older information may sometimes be used. That 2-year look back is normal, but it can create a major mismatch after retirement, divorce, the death of a spouse, or another approved life-changing event. Imagine a married couple who both worked full-time in 2024. Their combined income placed them above the Medicare surcharge threshold. In 2025, one spouse retired and household income dropped sharply. Their 2026 Medicare costs may still be based on the higher 2024 income. Unless they review the notice and ask Social Security to use more recent information, the surcharge may continue to be deducted, even though the income that created it is gone. Here is what you should look for. Find the notice Social Security sent explaining your Medicare Part B or Part D income-related adjustment. It may be called an initial IRMAA determination or an IRMAA adjustment notice. The notice explains the income information used, the premium decision, and your appeal rights. Do not confuse this with a Medicare summary notice, a drug plan statement, or a late enrollment penalty letter. The document you need is the one showing that an income-related monthly adjustment has been added because of your income. In 2026, most people pay the standard Medicare Part B premium of $202.90 per month. A person filing an individual return generally begins paying IRMAA when 2024 modified adjusted gross income was above $109,000. For married couples filing jointly, the first threshold begins above $218,000. At the first IRMAA level, the total Part B premium is $284.10. That is $81.20 above the standard premium. The first Part D income-related adjustment is another $14.50 added to the person's regular drug plan premium. If a qualifying request removes both first-level surcharges, the monthly difference could reach $95.70. Over 12 months, that is $1,148.40. At higher IRMAA levels, the difference can be much larger. The highest 2026 Part B premium listed by Social Security is $689.90 per month, before any other applicable adjustments. Now imagine a retiree receiving a gross Social Security benefit of $2,500 each month. If $284.10 is being deducted for Part B, the amount remaining before other deductions is $2,215.90. If Social Security approves a return to the standard Part B premium of $202.90, the amount remaining becomes $2,297.10. The bank deposit appears to jump by $81.20, even though the gross benefit stayed the same. But discovering IRMAA is only the first step. The document that may help you request a lower surcharge is Form SSA 44, officially called Medicare Income-Related Monthly Adjustment Amount, Life-Changing Event. Social Security says this form can be used when a major life-changing event reduced household income, and the person wants a lower additional amount for Medicare Part B or Part D. The request can also be completed online through a secure Social Security account, or the form and evidence can be faxed or mailed to a Social Security office. The first qualifying event is marriage. The second is divorce or annulment. The third is the death of a spouse. The fourth is a work stoppage, including retirement, layoff, or the sale of a business that causes work to end. The fifth is a work reduction, such as cutting hours or moving from full-time employment to limited part-time work. The sixth is the loss of income-producing property because of circumstances beyond your control. The seventh is the loss of pension income or certain employer settlement payments connected with an employer's closure, bankruptcy, or reorganization. The form contains specific definitions, so the evidence must match the category claimed. A drop in investment value, moving money between accounts, or choosing smaller withdrawals does not automatically qualify. And this is the first major warning. Do not complete SSA 44 merely because your income is lower. The form is intended for people who received a notice showing an IRMAA charge and experienced a recognized event that may reduce it. The official instructions say not to fill out the form when you are not paying an income-related adjustment, even if a life-changing event occurred. The second warning is that SSA 44 does not remove a Medicare late enrollment penalty. A late enrollment penalty and IRMA are different charges. IRMA is tied to income. A late enrollment penalty can result from delaying enrollment without qualifying coverage. If the notice does not say IRMA, this form may be the wrong solution. The third warning is about income estimates. Social Security uses Modified Adjusted Gross Income, or MAGI. For this purpose, the form generally directs you to use adjusted gross income from line 11 of Form 1040, plus tax-exempt interest from line 2A. Do not report only wages. Pension income, taxable retirement withdrawals, investment income, capital gains, and tax-exempt interest may affect the figure. Underestimating income can cause another adjustment later. If the newer tax return has already been filed, provide the requested tax evidence. If it has not been filed, the form allows an actual or carefully estimated amount for the appropriate year, but the estimate should reflect what you expect to report on the return. Now, let us walk through the process. Step 1. Read the entire IRMA notice and identify the tax year Social Security used. For 2026, that will commonly be 2024. Compare that year with your current financial situation. Step 2. Confirm that an approved life-changing event occurred and write down the month and year. If you retired in March 2025, your evidence might include an employer statement showing the date work ended. If your spouse died, the evidence may include proof of death. If hours were reduced, an employer statement or pay records may be needed. Step 3. Calculate the newer MAGI carefully. If your income fell in 2025 and will not be lower in 2026, the form's instructions may direct you to use 2025 information. If the income did not fall until 2026 or will fall further in 2026, you may need to provide a 2026 estimate. The correct year depends on the timing of the event and the income reduction. Step 4. Gather evidence before submitting the request. Evidence may include a marriage certificate, divorce decree, death certificate, employer letter, pay records, pension documents, property loss records, a signed tax return, or an IRS transcript. Confirm what Social Security will accept before mailing an irreplaceable original. Step 5. Submit through an official channel. Social Security allows eligible users to sign in and complete the request online. A completed SSA 44 and supporting evidence may also be faxed or mailed to a Social Security office. You can call Social Security at 1-800-772-1213 and say that you want to lower IRMA because of a life-changing event. Never submit Social Security numbers, Medicare information, income records, or bank details through a link sent by an unexpected caller, email, text message, or social media advertisement. If Social Security used incorrect tax information or you filed an amended return, you may need a different reconsideration process. Social Security directs people with amended returns to call and request a lower IRMA determination. If you disagree with a Social Security decision, the notice should explain your appeal rights and deadline. A non-medical reconsideration generally must be requested within 60 days after receiving the decision. Do not throw the notice away while waiting for your accountant, tax preparer, or family member to become available. Mark the deadline immediately and begin collecting evidence. This is not a loophole. It is a correction process for people paying IRMA from an old income picture after a recognized life event. Someone paying only the standard premium will not benefit, and retirement does not guarantee approval when current MAGI remains above the threshold. Here is your action checklist. Find the Social Security notice showing your 2026 Medicare premium. Circle the tax year used. Confirm whether Part B or Part D IRMA appears. Compare the old MAGI with your newer income. Identify the qualifying life-changing event. Calculate the correct MAGI, collect evidence, and use an official submission method. Keep a complete copy of everything. So, can checking one document make your Social Security check jump? For every senior, no. But when an IRMA notice is based on income from a working year that no longer reflects today's household finances, reviewing that document may uncover a Medicare surcharge that can be reduced. If the request is approved and premiums are deducted from Social Security, more of the existing benefit can reach the bank each month. The increase may be modest or worth hundreds each month at higher surcharge levels. The document is not promising free money. It shows where the money is already going. Check your Medicare premium notice today, especially if you retired, reduced work, divorced, married, lost a spouse, or experienced another major income change after the tax year Social Security used. One overlooked line on one official letter could determine how much of every future Social Security payment actually reaches you.